Mike Zuzolo is back with us to talk about COVID versus weather, an end game for in the near term for the UX selection battle, and the possible negative US soybean carryover uh, with the bulls in full run. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, tell us a little bit on what you mean about this COVID versus weather here.
Well, I think the big thing, Luis, that I think I wanted to kind of discuss this week was we had been talking for probably about a month or more about a return of COVID at maybe the worst possible time heading into the US and European holiday season. And I don't care about the number of cases, I don't care about the number of positive tests, but I really do care about the hospitalizations. And I'm beginning to think that with what we're seeing in the US and Europe in particular, that we really need to put a spotlight on the demand side and watch the livestock sector very closely these next couple weeks, because of the fact that Europe, the 7 day rolling average for deaths in Europe is at a new peak as of this week. The 7 day rolling average here in the United States is running at about 1,198 or roughly 1,200 cases or 1,200 deaths. And our previous record was back in mid-April of about 2,130. Hospitalizations are making new highs almost daily here in the United States, and our capacity in terms of hospital beds is running almost 75% capacity right now. And the fear is that it will only continue to go higher as the holidays progress. And we're starting to see a lot more lockdowns starting in Europe, now in the United States, and moving forward into other countries. And I can't help but think that that's going to hurt our demand base, and especially in the meat side and the energy side. So I think the weather people out there are going to have to really be very, very careful, because if you're a weather bull, that's fine. But if you start to see more rain in dry areas of Brazil and Argentina, I think you have some more downside. At least I would say the downside is as much as the upside at this point.
So, you think the domestic demand is more at stake here?
Yeah, I mean, domestic demand. And also, we have to remember that we had port problems with workers not being able to get to work. We had production problems with meat packers, with people not being able to get to work. I mean, if you really think about it, what we went through last spring, the hospitalization numbers are almost 30% above where they were last spring when we were dealing with such terrible problems. So while we have better therapeutics, it's still probably going to suggest, to me at least, that we're going to have people out of work for a couple several weeks. And the latest information from the CDC and from other scientists is that while first responders will probably get some of the new vaccinations as early as December, widespread vaccinations probably not coming till April, maybe even May. So this really puts a cramp on the demand side, and I think we really have to step it up. And the reason I say this, Louise, I don't know if you've talked to many producers lately, but the producers on my end and on my phone call and on my email, they're getting more and more bullish. They're getting more and more excited. And that's why I mean by the bulls are in full rut. They can't see any downside because of the weather in Brazil and the demand in China. And it's starting to make me a little bit nervous.
Yes, every farmer I talk to, they also say they are expecting new numbers for both corn and soybeans.
Yes, and this week I think an important marker was put down where Chicago and some analysts in Chicago were talking about a negative soybean carryout for the United States because of the Brazilian weather problems. I'm watching the Brazilian weather problems several times a day, and I think, clearly Parana and Mato Grosso are the two areas to hone in on at this point, because they're essentially 50% of the bean crop and about 40% of the corn crop, just those two provinces. And they're so far away from one another that if they both get rains, it's probably likely that the other provinces and major growing areas are getting rains as well. And so Mato Grosso is still a big issue in terms of drought heading into the next 10 days. But I think Paraná is looking a lot better if these weather models end up being correct, and we can still have a decent crop because the planting progress in those in Paraná in particular seems like it really came up. USDA did a good job of keeping track of that. And in that state, we went from being down about 22% in the middle of October to only being down less than 2% by the time we got to the 1st of November. So they really made great headway, which suggests they can still have at least an average, if not an above average crop.
Oh, I spoke today with an agronomist from my great state of Rio Grande do Sul, and he said that there is a huge need for rain in the coming weeks, and if the rain doesn't fall as expected, well, we will have problems with the summer corn crop in southern Brazil, and yet a reduced soybean crop by February.
Yeah, and I think that's where I'm headed as well. I mean, that goes back to our discussion about $13 beans I think we had last week, is I think that's in the possibility range right now. It's not in the probability range right now because it does look like the pattern's changing as we get into the second half here of November with some rains falling. But only the weatherman knows. I guess what I have to say is kind of what we've talked about the past few weeks is taking that unlimited risk and replacing it with a known risk as we are crossing that, getting close to $12 nearby beans and up to 10.50 in new crop beans. I really don't want to let these prices slip away. And we've never gone through a pandemic. We've never gone through a pandemic for a second wave since 1918. And I'm not trying to compare those two at this point, but the second wave was much worse in 1918, 1919 when it came right down to it, and a lot more problems ensued. And we can't forget how tight our global supply chain is and how linked it is and how fragile it is. And I'm afraid that while there is some progress that's been made on the supply chain since the springtime COVID outbreak, we just simply haven't had enough time to really make permanent changes to make the supply chain that much better than what it was back in the spring. And I'll finish with this. I mean, we know that the bean oil market is extremely strong, and that's one of the big reasons why we're seeing the market hold up so well. It's China's demand, it's weather, and it's also the bean oil market and the tight supplies globally of vegetable oils. We also have to remember, though, that the vegetable oils are the consumer and the most elastic because they're hitting the human consumer, whereas the soy meal market is the one that hits the feed side of the equation. And I think this is where, while the beans have made new 4-year highs, soy meal this week has not been able to get above $400 a ton. It hasn't taken out its 2018 highs yet. So there's starting to become a disconnect between the meal price and the soybean price, both in terms of cash and how much we are premium to Brazil and Argentina in meal, as opposed to the discount we've been carrying in soybeans. So I'm just starting to see some surface cracks here on this rally, and I want people to realize that these cracks are now apparent and they're there.
And I think using your words right now, there is more probability than possibility right now that Brazil would import corn from the United States.
Yeah, I think there's less restrictions on the GMO front if I know what I'm talking about. And I confess I have not looked as deeply into that as I should, but I know there's something like nine major GMO traits that the soybeans are under. That's made it very difficult for the soybeans to come into Brazil because there's not much you can do with them after that because of the regulations. But I think corn would be a lot easier because Brazil would probably keep it for their domestic market and feed it pretty substantially. And most of the soybeans that they would consume, I would think, other than crushing in a meal, would go right back out the door to China at this stage. Interesting to note, in China, the largest European pork producer, the Danish Crown, was just interviewed just today before we went on the air. And he is supporting some of the information I've told you about African swine fever in China, suggesting that China will continue to be a major pork importer for 4 to 5 years more because they can't get the handle on the African swine fever. They rebuild their herd, but the African swine fever comes back in the major producing areas. So I think this is good for soybean consumption in terms of the Chinese needing to keep buying. But I don't think we're going to see that massive influx of soybean consumption that everybody's looking forward to in 2021. I think they'll have to purchase the soybeans through the pork meat in 2021 more than maybe the trade's thinking right now.
That's exactly where I was going to ask you right now, because there is a number that the market is talking about right now that is 100 million metric tons of demand from China regarding soybeans. Do you think that tends to be sustained, increase, or decrease over the years?
Yeah, I'm still between 95 and 97. I'm still working with the number that the USDA Ag Attaché in Beijing put out about a month or two ago. I'm at 95. I could see it going to 97, but I feel like above 97, those beans would probably be re-exported into another country by China at this stage, especially if they can buy with a strong currency like they can and then sell off to a country that has a weaker currency and be able to make more off of that. I think that's really a possibility. But like we've talked about before, the ability of China to cancel beans or to play the United States against the Brazilians goes down every week that we don't see rainfall in Brazil and Argentina. And so that becomes less of an issue for me as we get towards the end of the month. It becomes an issue and stays and remains an issue for me if these rains do start to come through and we start to build back some precipitation. Because I think you and I can agree that depending on what part of Brazil gets the rain, once the pattern shifts, it tends to shift for a while. It doesn't, rains just don't pop up and then go away again in Brazil, based upon my experience. They really tend to stick around and can, in fact, create a lot more havoc by flooding and having too much rain once the rains finally come. So I'm inclined to think that if the rains begin, they're not going to have a drought after the first rains fall. So
Yeah, most Brazilians are used to at least 1 day of rain per week, so I guess you're right. But I would like to ask you, keeping those in this long-term question, what about the other players? A long time people have talked about Vietnam or Bangladesh. Do you think they probably will have a very significant increase in demand, and considering the facts that succeeded in the last months, do you think that China will be a trade hub?
yes, I think the RCEP trade agreement that was signed by, I believe, 15 different countries, most of them ASEAN countries, ASEAN countries, that will really lift the ability of these countries to be able to compete more effectively with the United States and Europe in the coming years. I think the one thing that I continue to look at that maybe slows me down as far as Vietnam and Bangladesh and the Philippines, because they've become such large meat producers. Malaysia is a big player now in agriculture, and the diet changes that these countries have been under the past 20 some years has really taken off. And I'm concerned, though, that if we don't come out of COVID smoothly and the United States and Europe slip into another recession, China cannot help but avoid another recession because they still need the European and US imports in terms of purchasing power that we buy and that the Europeans buy from China to make their GDP. Yes, they're moving towards a service-oriented economy, but it's way too early for them to be able to rely upon their services and their domestic demand to replace the exports that we take in from the United States and Europe. So if China slows down in 2021 because of the United States and Europe, that will, I think, slow those other countries down so that we won't see any demand increases and diet changes will be put on hold. Some of the scientific community are actually talking about life expectancy going backwards because of COVID and this pandemic in the next 5 to 10 years, 5 to 7 years. I think that's a really compelling argument to make because of the disease and what we've had to go through as a population, a global population. So it's not just deglobalization economically that I'm kind of worried about, but it's also the fact that without globalization and without healthy people, the middle class of the Asian countries that you're talking about, they won't have that buying power as much as they have the last 20 years. So that's a really tough question to answer right now. But the quicker the vaccine comes out, the quicker it gets distributed, the less long-term impact I think it'll have on us.
Yes, and what do you think the election is going to play in this trade thing and about the US dollar? That is something that I think we have to watch closely in the next months.
Yeah, that's a good question. I'm glad you brought it up because I think that this idea that the election is going into an end game, I don't see it right now. Whether it's the runoff election in Georgia that's going to decide the U.S. Senate, or whether it's President Trump trying to hold on and win through lawsuits, throwing out a bunch of votes in these key states that he's fighting with Vice President Biden on. I think this is going to go along another 2 to 3 weeks. And it's interesting with the dollar index right now. We've seen a real trend where the dollar is weakened against the Chinese currency and it's weakened against the Brazilian real, and that's been good for the commodities. And it's almost as if the dollar index doesn't matter as much as how the dollar trades against the ruble, the yuan, and the real. I'm kind of thinking that that's going to be the main thing that I work with and focus on the next couple of weeks at this stage, Luis. The only thing I would put a caveat on that is that the index, the dollar index, could come back as a real safe haven if this COVID spike continues to get worse and worse and worse, especially with Europe making new death, new numbers of death being at a new record high. That would suggest that the euro and the British pound probably are not the place to go to. So maybe we have a strong dollar and a strong Chinese yuan at the same time. But I think watch the technicals in the dollar index starting in January, especially when we maybe do have more of an end game on the U.S. Senate and the presidential election here in the United States. Because if COVID's still around and we get out of this transition smoothly, and the Senate stays Republican and it's more of a balanced government, then I think that might give the dollar a buy signal, and it'd be something to really watch as we get ready for South American harvest, where maybe we have some headwinds during South American harvest on the commodity prices.
Yes, and I would like to ask you about the what do you see in terms of the farmer pocket regarding Biden presidency? If we have more trade, but at the same time more taxes.
Yeah, and I think this, and then you have to blend in that energy issue. Does Vice President Biden, who becomes President Biden, does he enact a very strict green policy right away against cattle producers and hog producers and against fossil fuels? I think that's a possibility right now, but you're exactly right. If we have high taxes, but then we have more multilateral trade, those two could cancel each other out. I'm inclined to think still, with the way things have transpired, that a Biden win, President Biden in the Oval Office come mid-January at Inauguration Day would be more deflationary because of the energy and because of the taxes, that it would promote a stronger dollar, not a weaker dollar. And we would have probably Wall Street continue to stay strong, but maybe the commodity markets not have the reflationary trade that we've gotten used to the last 3 months. That's where the analysis is still pointing me at this point. There is a really good webinar coming out by the Kansas City Federal Reserve. They're going to be talking about energy policy and what the future holds, and that's just coming out later this week. So hopefully when we talk next week, I'll have some more data, because I've been in contact with the Federal Reserve and have asked some questions before the webinar, hopefully to get them answered. So we'll hit this up again next week. Maybe I'll have some more clarity for you.
I don't want to jump wheat, and we have written here a very positive scenario for both corn and soybeans. But do you think that wheat will follow?
It's lost its compass. It's lost its leadership compass. It's kind of lost its way here. And we see this with the technicals and we see this with the fundamentals. I have been very disappointed with the exports this week, Luis. The weekly export inspections coming in at 12 million bushels. The weekly export sales on Thursday morning, USDA reported at only 7 million bushels. That was a marketing year low. We are certainly seeing in the demand side how wheat is too expensive here in the United States compared to the Baltic regions. And so Russia is still an issue weather-wise in their winter wheat crop. I'm hoping that we still see that Baltic price rise and rally. Europe rallies, and then the United States isn't so premium to the rest of the competition out there. But we really need a boost from the global wheat price right now. Because the United States wheat and the export side of the equation is not getting the job done. And the weather models like southern Brazil and Argentina, the weather models are suggesting quite a bit more rain for the driest areas of the hard red wheat belt. But, going back to Russia, it was interesting. I read a story not long ago from a European group that said that the potential for the Russian crop is very hard to gauge because they think they had ICAR thinks they had a record planting, but they also think they had a very large amount of the area that literally didn't germinate. And now that it's under a blanket of snow, they can't tell how much. And so I think that's something to keep in the back of our minds when it comes to the Russian competition this coming spring. Maybe it won't be as great as what we've seen the last few years.
And what are you recommending for the ones taking decisions regarding wheat, especially spring wheat?
Yeah, spring wheat, I'm very close to wanting to make some hedges because the weather is turned around up there. So that it should be a pretty large acreage base. Canada is looking good as well in their weather pattern for the spring wheat plantings. So I really want to get caught up on some spring wheat hedges, but the price isn't quite right yet. I kind of like to see a 35 to 40 cent rally. I'm hoping that the winter wheat market, that the hard red wheat and the soft red wheat lead the spring wheat up some so that I can get some hedges in.
Anything else, Mr. Zuzolo?
I think that'll do it. Thanks for having me, Louise.
Thank you.